All right, all of you wonderful candidates, time to practice, get some application going in for our code of conduct multiple choice questions. First off, we are Bingham CPA, just a CPA practitioner, who has been asked to join a local bank's board of directors. We got 4 separate scenarios, which would be a position that Bingham can accept. Now, couple points. A, if you remember from the lessons, there's just going to be a bunch of criteria we need to memorize, right? What would impair independence? What would not impair independence? And luckily for you, I've got the lists here that you should remember from the lesson, right? Items that would not impair, items that would impair independence. So you could apply that, right? You could apply those, as well as you definitely want to think about this. So there will be questions that could branch out past what we need to just memorize. So let's think about this. So you are a CPA. You're not auditing or doing any work for this bank. They just asked you to be on the board of directors. However, you do have other clients, right, who are doing business with that bank. So would this impair independence? First off, we're reading. So one of Bingham's clients is struggling financially, is in the loan application process at the bank. So Bingham is now, Bingham already has a working relationship with this client. Now Bingham's possibly going to be in the board of directors, right? A governance position in the bank. So that is actually a conflict of interest, right? That would be because Bingham's got a fiduciary duty to the bank, Bingham's got a fiduciary duty to the client, and you can't have a fiduciary duty with these 2 individuals or 2 entities that are seemingly at odds with each other because of that. So that's why I'm going to cross off letter A. Next up, one of Bingham's clients has several business loans outstanding with the bank. So right here, again, it's not as serious as this one, right? Struggling financially, but that would be a clash of fiduciary duties. The bank's trying to make money from the client. Bingham's trying to service the client, do what's best for the client. So that would be, again, conflicting fiduciary duties. Next, several of Bingham's clients have savings accounts at the bank. So this is pretty standard, and as we'll see in many questions, just having a savings account, I mean, that's not really anything too wild. I'll put it at that, right? Nothing too wild. I mean, savings accounts are, especially if they're insured, we saw the criteria, right? If it's all insured by the government, then you're fine. There's no independence concern here because it's money that belongs to these people. It's not a business loan, right? It's not a more complicated contractual relationship. So I'm going to leave this on the table, right? This would be the situation that Bingham could join the board of directors. Next up, several of Bingham clients are in negotiations with this and other banks for operating loans. So yeah, again, same thing with A and B. This one would be unacceptable, conflicting interests. Whereas if we talk about savings accounts, right? If we things that would not impair independence, right? Credit card balances that are below a certain amount, insignificant bank accounts, checking account below the amount insured by the government. So checking, savings accounts, it does fall in line with these points right here. So, if it said, oh, there was a savings account with $100 million, okay, that's a little bit different than our seemingly menial savings account there. So look, there we are. Final answer here is letter C. All right, moving forward. A CPA in charge of the external audit of a non-issuer received an unexpected inheritance that includes 100 shares of the audit client's common stock. So right away, they're going to try to get you to think, oh, it's a big deal, right? Oh my gosh, you got a bunch of common stock for your audit client, which is a conflict of interest. Let's acknowledge that right away. I mean, you can't. If any of you have experience in auditing, right? Like go through the portal at your firm and say, okay, I don't, I confirm I don't own any stock. I cannot buy any stock in this company because I'm auditing them. And in that case, it'll be a conflict of interest, right? It would potentially, you would want to, even if you're a base level associate, it's just what the rules are, right? They don't want you to have an incentive to overstate the numbers, so your stock investment does better, even if it's 1 share in Apple. I mean, not gonna break the financial world right there. But anyway, that's kind of the thought process here. So you didn't choose to get this stock, right? Unexpected inheritance. You just received the shares. So you don't have to resign from the audit firm. That's extreme. Let's be real. That's very extreme. Which should you take to avoid violating the independence rules? So, I mean, yeah, technically this could be the right answer. But again, that's extreme. there's a better answer here. Decline to accept the inheritance. Again, like this is something you could do technically, but this is under the impression that you're still, you're not going to quit your job. You're not going to decline the inheritance. There's something you can do here to still have an inheritance, but get benefit from it, but still have your job. So petition the AICPA for an exception. No, again, this is a very standard situation. And the standard situation is you just sell or donate the stock within 30 days, right? But 30 days is a reasonable amount of time. It's saying, all right, you didn't expect to get this. We'll give you a little bit of time. So sell it, get rid of it. You can benefit from it because you got the cash in that sale. So you're good, right? You're good. You're able to continue working on the audit. Happy you, right? You're able to work, get that done. So just visiting again, right here, items that would not impair independence, right? If we no later than 30 days, we got to dispose of that as soon as practicable. So got to get rid of that pretty quickly. Again, not your fault that you received it. So it's all right as long as you get rid of it. Next up, considering only the provisions of the AICPA Code of Professional Conduct, which of the following services may a CPA perform for a commission or contingent fee? All right, so what's the whole drama here? What is the chisme? What is the tea? Well, it is because if you're receiving a contingent fee or commission, right, it's a performance-based salary. So if it's saying like, oh, I'll get an extra 10% from the client if I give them a clean audit opinion, well, that's a conflict of interest there. You need a set flat fee for attestation services for these for where you're providing assurance, because then that would skew your independent view of the client. So right here, and there is something memorized to be familiar with here. So first off, I would say, let's take a look. Actually, interesting. Yeah. So a lot of different tax talk here. And what resources do I have for you? Well, right here, we may receive a contingent fee for seeking a private letter ruling. Essentially, what we're talking about here, and you've seen this in the lesson, right? It's you're acting on behalf of the client. You're arguing against the IRS saying, oh, we should take this tax stance, and it's okay for us to do that. And if that's acting on behalf of the client, and yeah, for that, it's kind of fair. Like the more money you save the taxpayer, the more commission or more contingent fee you should receive. So that would be the situation where we would be allowed to do this. So again, key here is a non-attest client. Preparation of just a tax return, no, that's not okay. You're not going to, because that would incentivize you to possibly take aggressive tax positions, to lie, cheat, whatever it is. That's not allowed there. Performing consulting services, audit client. So right here we see audit client. Nope. When it comes to attestation, auditing, any of that, nope. We are not allowed to do commissions or contingent fees. Preparation of an amended income tax return to claim a deduction. So essentially, this is an extension of letter A, right? Inadvertently omitted on an originally filed return. So this is just an extension of letter A, right? So it's saying, okay, that was originally filed, but now we're doing an amended version of that. So again, recapping what we talked about on that other slide, it needs to be non-attest, and you're acting on behalf of the client legitimately. No auditing related, because you can't. That would impair independence, and that just would not be good. That would break all the rules, and we don't want to break the rules. All right. Last one. We've got Bannister, a CPA, is approached by Wagner, a client. Well, the client wants their records. Okay, that seems fair. Okay. Wagner still owes Bannister the fees associated with the audit. We got a conflict going on here. So client still owes the auditor fees, but the client wants their records. According to the AICPA Code of Conduct, what should the CPA do? Right? Should we just give the records back? Should we not return the records back? What are we going to do here? And I'm going to bring you over to this slide. And well, per the AICPA, we do have some acts that are discreditable to the profession, and not giving clients their records back when they request them, that would be a problem. So yes, the fee should be paid. And yes, but that is a separate issue that is unrelated. So, I mean, yes, it is related, but per the AICPA's rules, you need to give the records back. yes, you want your fee to be paid, but that would be a separate issue to take up in, maybe the court if it's that serious. Should not return the records because the records now belong to Bannister. No, the records are, remember, the work paper is the work paper. The audit work paper belongs to the auditor, but the client's records, like their bank statements, reconciliation files, all of those belong to the client and should not return the records without a court order. Yeah, no, you got to return the records. And then again, and then after that, you can pursue legal action, better call Saul, and then get that money back from the client. So leaving us with just letter A, that is it. Thank you all for joining into these multiple choice questions. I hope they were helpful. Actually, I know they were helpful, so I just hope you appreciated them. I'll let my arrogance slide there. But again, thank you all for joining and hope you have a great rest of your day.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.